Hello, today I'm going to do something different. I'm in different kind of video. That means the content of this video will be very informative, and today's video will be very useful for competitive examination. I want to concentrate on some specialized terms and definitions. Specialized terms and their definition. That is terms in a particular domain of knowledge, okay? So in this content oriented video, we are going to discuss some relevant terms from a specialized field of knowledge, that is international financial management. First terminology, balance of trade. It is the difference between the value of export and import of merchandise. That is the difference between a country's value of exports and value of imports over a certain period of time. That's called balance of trade. And also, it's an important component of a country's balance of payment. It's an important indicator of the country's trade. A positive balance of trade indicates a country's trade surplus, while a negative balance of trade indicates trade deficit. In simple sense, when a country imports more goods than it exports, it experiences a trade deficit. Whereas when a country exports more goods than it imports, it experiences a trade surplus. Next, balance of payment, that is BOP. It's a macro level statement showing inflow and outflow of foreign exchange on different accounts. It includes international transactions between countries. That is, when funds go into a country, a credit is added to balance of payment. When a fund leave a country, a deduction is made. We can say it's a record of all international financial transactions made by the residents of a country. Okay, there are three main categories of BOP. It's the current account, capital account, and the financial account. One more thing, when a country's current account is at deficit or surplus, its balance of payment is said to be in disequilibrium. Okay. Next, balance sheet hedge. It's a technique to hedge translation exposure. So a question will arise, what is translation exposure? It's a kind of accounting risk that arises due to fluctuations in currency exchange rates. I have done a separate video regarding foreign exchange risk. So if you want to know more about this translation exposure, I will put the link in the description. Please do watch, okay? Here the term balance sheet hedging, it's a hedging program designed to protect forex denominated assets and liabilities from changes in the value due to exchange rate fluctuations. Next concept, measures of money supply. Do you know the difference between M1, M2, M3 and M4? These are four measures of money supply. First of all, you have to know what is money supply. It is the total amount of money, that is cash, coins and balances in bank accounts in circulation. Okay. In simple sense, it is the total quantity of money available in a country at a point of time. That is, total volume of money held by the public at a point of time. M1, M2, M3 and M4 are the four alternative measures of money supply. Okay, let's see what is M1. M1 is equal to currency plus demand deposits. Here currency means notes and coins held by public, and demand deposits of public in banks. M2 is equal to M1 plus savings deposits plus post office saving deposits. M3 is equal to M1 plus net time deposits. Time deposits means fixed deposit. Next M4. That's equal to M2 plus total deposits of post office. Here M3, that's called broad money. It's also called aggregate money resource or money aggregate. Okay, these are the four alternative measures of money supply. Next term, basis point. It is 1/100th of 1%. It is a standard measure for interest rate and other percentages in finance. It's used to show the change in the value or rate of a financial instrument. 1 basis point equals 1/100th of 1% or 0.01%. Do you know the term bells and whistles? It is the additional features of a security intended to attract investors or to reduce the issue cost. These are the special features that are added to ordinary investments to attract investors' attention. We can say an extra incentive to encourage investors to buy a bond or preferred stock. Okay, fine. That's all for today's video. Hope I made all these terms clear for you. Thank you for watching. I'll be uploading more content oriented videos like this from different disciplines in the next days. So please press the subscribe button, press the bell icon so that you can get notification as and when I upload a new video. Any doubts or queries, please do comment. See you in another video.